Chronicles. I think I messed up my volume on my mic. So let me know in the chat box if this is too high, too low. I can always adjust it. Sorry, my hair is out of control. I did not comb it this morning. And it's just me. Chris Patel, the Desi God, is busy at work tonight. So unfortunately, it's just me. But I did want to bring in some of the material and hopefully tee him up for tomorrow, specifically talking about M2 money supplies and things along those lines. So he had a really good tweet, which I guess instead of just talking about it, we'll hop right into it. But before we do so, I want to mention oil is still above $90 a barrel. Amazon, which I thought was going to be called away from me because I had a covered call at 140 last week, is at 126. Google 129. Palantir just below $14. SPY, the SP 500, is hovering in the 4,200 to 4,300 range. Dutch Bros, a company that unfortunately I invested in way too early, is down to just below $24. And yes, I have been adding more to my position. And NVIDIA is holding up relatively well. I was really expecting it to be in the high 300s today. And lo and behold, look it up, update the ticker, and it's still above 400, which was pretty crazy all in all. And Apple's hanging in there pretty well as well. So I was pretty surprised at some of these positions hanging in there. Miss June, hello. Dex, what's going on? George, what's going on? Appreciate you guys stopping by as always. Now, let's hop specifically into what Hot Chris, the Desi God, had to say specifically about M2 money supply. Now, I haven't looked at this in months. I'm just going to be blunt with you guys. I've not looked at this thing in months. And all I know is that this is basically just like the cash that people basically have in their accounts. And, I've just known that after the pandemic, things were skyrocketing, right? People are like, oh, we have 40% more cash in circulation than ever before. There's M1 money supply, there's M2 money supply, there's M3 money supply. And so what does it all mean, right? Hot Chris always has a really good take on these things. And so let's just read specifically what he's referring to when he's talking about the M2 money supply. Now, this is a U.S. Federal Reserve estimate of the total money supply, including all cash people have on hand, plus all the money deposited in checking, savings, other short-term savings vehicles like certificates of deposits. So what does this mean? Basically, people don't have any damn cash. And people are basically focusing on, debt and debt vehicles because people aren't stacking their cash. And I think, what does this do? This kind of like gave me a little bit of a scare initially when I kind of saw these things. And I was like, well, what does that mean? Right? Like if you were to actually say, what does this actually mean in terms of what's going on in the economy? I think that this is something that's planned, right? And I'm hoping I'm teeing him up for a good conversation tomorrow. This is Yahoo Finance, so take this with a grain of salt. But let's just kind of open this up and see specifically what they're kind of talking about. And what is the money supply? So U.S. money supply is measured various ways, M1, M2, what have you. M1, most accessible forms of money like cash, coins, checking accounts, whatever. M2 takes into account savings accounts, CDs, and money market funds, which obviously most people have in their investment accounts. So that's something that people would probably consider. And so just like we had mentioned, U.S. money supply increased at a rapid pace after the pandemic due to the large stimulus packages that were kind of given out. Money supply grew from 15 trillion to a peak of over 22 trillion in 2022. And what does this mean when we actually go ahead and reduce? So the M2 money supply, just to give us some actual concrete numbers, 21.7 trillion in July of 2022, so just over a year ago, to 20.8 trillion. Well, that's not as much of a reduction as I really thought, but at the same time, a 4.1% reduction in a year, what does that actually mean? And what is that actually going to show up as? And I'm just going to read this. I haven't read this earlier. So, if Hot Chris, has a specific, thought process on this, we'll hopefully get his viewpoint. But yes, I already did see somebody said this is a year over year sort of chat, year over year sort of graphic. So you can't take all those things verbatim, right? So historically, a reduction in the M2 money supply is not common. In fact, there hasn't been a reduction in M2 money supply since 1933. Jesus, 90 years ago. And while we live in a different age, these are historical indicators that show a reduction in money supply has preceded a huge economic event. According to the data, meaningful reduction in the M2 money supply, or 2% or more, has only happened 4 times since 1870, and each time has preceded a depression with double-digit unemployment. According to this gentleman, when the money supply is reduced during periods of inflation, this means that there are few dollars in the economy to pay for higher priced goods and services. This reduction causes deflation, which can hurt businesses, leading to layoffs and ultimately stock market crash. Now, this makes sense, right? I mean, this is potentially what the Fed is trying to do. I don't necessarily think that they're trying to make sure money M2 supply goes negative per se year over year, but what they are trying to do is slow economic growth a little bit to stop inflation, right? And so reading on, this deflationary depression happened in the 1870s, 1890s, 1921, and the Great Depression. The depression hasn't happened in nearly 100 years, partly due to the creation of the Federal Reserve and evolution of the monetary policy. So I'll stop it there. And this is probably going to be a short episode. Apologies specifically to kind of shorten that up and kind of give you. But, lots of different things that we can dive into. And I don't want to speak on behalf of Chris by any means, because he's probably way more educated on these things than I am specifically. And so, hey, thanks for coming a member, man. The first member. That's awesome. Really appreciate that. That's really cool. Yeah, if you guys, while we're on the topic of like membership and stuff, Hot Chris has a Patreon, and so he does a really good job, with that, and so be sure to give that a look as well. But Sam, much appreciated. First member on the channel, means a lot to me. Hopefully, we can continue to grow and do well by everybody, and hopefully, people can learn. But we'll leave and tee that up for Chris, the M2 money supply topic. And the next thing that Sam actually mentioned earlier, which is why I'm actually bringing this up. So it was a really cool mention to him, because I checked my phone and I get a tweet, directly from him, specifically talking about Rocket Lab and their revenue guidance update, which I wasn't privy to up until I kind of saw it on the website. So obviously, you guys know I'm a big shareholder. I think I bought another couple hundred shares. I'm trying to get to 3,000 shares here in relatively short order. Let's double check I'm sharing here. I am. And so folks that may or may not know, I think last Sunday or Monday, Rocket Lab had, after launch, they tried launching the second stage of one of the rockets, and unfortunately they lost control. I don't know if it detonated. I don't know if it just didn't ignite. And so they mentioned on their site, on their tweets, maybe we'll go through a few of those as well, that they were going to come up with an update here pretty soon. And hopefully that means that they'll be able to get ready back for launches again. But specifically with this, because of that instance last week, they're delaying one of their launches that were supposed to happen this week. And so with that, here we are, the 26th of September. The quarter ends here in a couple days. And so they're pushing out guidance of that launch to 4Q, if not longer. They haven't really officially stated when that'll happen. And I guess we'll find out when they have the Q3 update what the potential for Q4 is, because generally they always provide a guidance ahead for Q4. And so that will also be a fiscal year 23, and probably a fiscal year 24 look ahead, maybe, unless they're going to wait for 4Q for fiscal year 24 look ahead. But what I want to highlight specifically is what they've seen with respect to space systems revenue and where they were prior guidancing, before this, and where they're guided now. And generally speaking, these launches, I've seen them go for as cheap as 6 million. I've seen them go for as expensive as 9 million in terms of revenue. And so without this launch, it looks like you're getting about that 6 million-ish range to 9 million range of impact, depending on, what happened. So That is showing up as like an 8 million loss, from 30 million for launch services to 22 million. And I think because they only had 3 launches in the quarter versus what I assumed would be 4, and I assume what they thought would be 4. And they also guided for space systems revenue of 43 to 47 million. That is now gone and tightened up a little bit, obviously because they've had a little bit of time in the quarter to tighten this up. And this is now 44 to 46 million. This also impacts the gross margin on a GAAP and non-GAAP basis. So they were forecasting 21 to 23%. That's down to 18 to 20%. Now, the thing that I'm looking for specifically in this is a large drop, right? I mean, this is about a 3% drop. Is that specifically from this one launch, right? What I'm anticipating is space system revenue, the cost of goods sold and then the gross profit margin associated with this is probably pretty easy to kind of keep in touch with, right? This launch revenue might be a little bit more difficult, a little bit more volatile. And so with that, if one launch moves this by 3%, it makes me very bullish. And you probably are sitting there like, why does that make you bullish? It's very weird. But if you think about it, we're in this cadence of about 14, 15 launches a year. Now, say we go to 20 launches, 25 launches, 30 launches. If one launch has an impact on a quarterly EBITDA, quarterly gross margin on a GAAP basis of that much, then to me, this means we're getting closer and closer towards profitability. Now, I'm not going to say that if you add a second launch comparatively, like if you go from 4 launches to 6 launches, this is magically going to go to a 30% gross margin. I'm not saying that. But what I am saying is eventually you're going to get to the point where you're hopefully going to climb closer and closer to this non-GAAP margin of 28 to 30-ish% over time. And that's kind of just based off of share-based compensation getting, smaller and smaller portion of the revenue, and a lot of these other non-GAAP items kind of being smaller and smaller portions of impacts, like financing costs and stuff of the like. So it just makes me a little bit more bullish from that perspective, to kind of see that we're getting into the high teens, low 20s in terms of gross margin. And on a non-GAAP basis, we're getting to the mid 20s to low 30s. That's very promising to me, specifically when we were looking at single digit GAAP gross margins not too long ago. And so to me, that just means we're getting closer and closer to EBITDA break even or cash flow break even. And from there, obviously you don't need to finance. And with that, it is what it is. So you also saw the adjusted gross margin or the non-GAAP gross margin go from 28 to 30 to 26 to 28. So a 2% impact there. I had something to say about this. And so I wrote a tweet about it. Let me get this one up, and then we'll probably pause for some questions from folks for a little bit, and then we'll probably call it here. So obviously, I don't want to beat a dead horse, but the things that are different. So obviously, we're talking about the revision for 3Q due to the one less launch in the quarter. Revenue is expected to grow between 5 to 8% year over year, which that's down. Obviously, if we had the additional launch, that additional 8 million in revenue would be 15 to 22% growth, right? So that is probably more along with what I expected. Now that we have several launch controls up and ready, and we're getting ready for launch control number 3, or launch pad number 3 for Neutron. That's kind of what I'm looking for here. Just continuing to grow faster and faster, and the launch cadence continue to increase. So I feel like we're in this point now where we're in 15 launches or so. But at what point do we start to get to 30 launches a year, 40 launches a year? And I'm hoping we're not too far away from that. And I'm hoping that I hope that it's not a distraction of, focusing on Neutron and Electron launches. And it's truly just a waiting for customers to kind of catch up and want to launch more, if that makes sense. So the nice thing, as we kind of talked about a little earlier, GAAP gross margins increased from 13% to 18 to 20% year over year. So that's a 5% to 7% increase. So that's good. And then same thing with non-GAAP, going from 24% to 26 to 28%. So anywhere between a 2 to 4% increase in non-GAAP. And so that just goes to show, whether that's the space systems, whether that's the launch and the ability to get the total costs of launch down, is showing up, right? And it's going to help us get closer and closer to that cash flow break even point. The increase in margins will lead to an increase of 50 to 70% of GAAP gross profits. That's not net profits, right? So it's gross profits. So this is basically cost of goods sold, and you're subtracted from your revenue. And this is an increase from about 8 million on a quarterly basis to about 12 to 14 million. So now we're getting to a point where we're generating and hopefully we'll be generating closer to $60 million in EBITDA in a year's time. Where am I at here? A 13 to 25% uplift in non-GAAP gross profit. Sorry, this is more like the EBITDA. So this gets us to 17 to 19 million, and that's up from 15 million. So that's pretty cool. And then obviously with that, the OpEx is getting smaller, coupled with the EBITDA getting larger. And so the cash flow break even is inching closer and closer. That said, I don't think we'll get to a point where we won't be on a cash burn. So I do think that we'll be close to 400 million. We were at about 419 million, if I remember correctly, in Q2. And so hopefully get closer to this 400 million or so. And that'll be something to kind of look out for. Trying to think if there's anything else I really want to discuss about this, but very confident that, and maybe it's just prudent that I pull this up here. RKLB, Lab, because I did specifically say that they were honing in on the issue. Let me just double check that I'm sharing. Cool. Did say on the 44th launch took a experienced an issue, and so that's kind of that. I'm curious if they have any other notes on their site. They did mention the update here on today's launch, and that's pretty much it. But this is what we do it for, man. You can't really see it all too well, but it's very inspiring when you get to see one of these things launch off. But yeah, the anomaly was a setback, but I think that it's been something that Rocket Lab has been able to endure before, and so I think we'll continue to get past again. But that is that. I don't want to dive into too much. I'd rather talk to you guys about what's on your guys' mind, answer any questions that you guys have, and we could save all the fun stuff till Hot Chris, the Daisy God, gets back. But yeah, my guy, SG got the ears lowered a little bit on Friday or Saturday. Trying to remember, but it is what it is. Bonds got hammered last year. Maybe people who hold those switch to money markets. I'd anticipate. I also think it's just a lot of people sold out, and I think that had a huge implication on it as well. I think a lot of people should be thinking about bonds more and more. It's going to be a tough time though, because unless for certain we're going to be cutting interest rates, you're going to set yourself up for more losses, right? So why buy a bond at 5% if it's going to go to 6%, right? People are going to be really reluctant to do that. So you're kind of stuck between this rock and a hard place. Anyway. Let's just see. Had 3 negative newsreel on RKLB. Share selling from CEO, debunked by CEO, launch failure, legit. Today's guidance down, this all comes to immersive small cap selling, interesting timing. I don't know if it's really interesting timing. I mean, the two are correlated. The CEO selling, I mean, some people might look through that and say, um, oh, it's real. He's trying to sell out and yada yada. But I think it's truth. I mean, he talked specifically about estate planning, and you have to think. Let's just say you have $1 billion worth of stock, and unfortunately, Peter were to lose his life. Then you're transferring $1 billion to all these heirs, and that's just going to be a lot of taxes that are going to have to be paid. So if you have it appropriately estate planned, those people will be able to utilize a lot more of it instead of it going to taxes, right? So estate planning is very important for those of you guys that haven't really looked into it. It's something I've unfortunately come to learn over the past 2 years. Don't they have insurance for flight failures? That's a really good question. Maybe I wonder if they ask questions on Robinhood like they do for like Palantir, where you can ask questions. It's a really good question. And maybe I'll poke Peter and see on Twitter and see if he'll answer. Day was good. Can't complain. A little bit longer than I wanted, but we're working on something for Thursday at work, and so hopefully once we knock that out, things will get a little bit easier until the end of the year, and I can relax a little bit more, not worry about working so hard. Tide raises all boats equally. Deflation means your dollars are worth more. Deflation is bad for banks, good for us working stiffs. Well, yes and no. I mean, yes, it means if you have a lot in your books, right? You have a lot of cash. It's good for you, but you have to think: is it going to be detrimental to your employer? Is it going to be detrimental to the banks? Is it going to be bad for money lending? All these things that if you have a bunch of cash and you're Scrooge McDuck and you have been finally that $5,000 to be keeping under your mattress is now worth $6,000. Good, by all means. But I think most people don't live in that world where they have excess cash. And so you'll end up having a lot more recessionary sort of flavors rather than good benefits. But I agree with you. I mean, if you have a lot of money in your money markets and stuff like that, you'll end up doing really, really well. So I think it's a double-edged sword. And I think another piece of it is it'll be really bad for overall businesses because they might be buying it at, let's just say, $1.50 for the cost of goods, and now they have to sell it for $1.50. On paper, they technically are losing money, and so it might be bad for stocks in that respect because technically, in that case, they're buying things and they become more expensive to kind of maintain. And for us, it's good because they bought it for $1.50. We're able to buy it for $1.50 because over the say 6 months or whatever, the deflation of that dollar got to the point where their margin shrunk away and got demolished. But if they're not making the money, then anyway, I'm not very good with the deflation stuff. We'll have to ask Hot Chris what his take is, and I'm sure he can explain it a lot better than I can. Since you're in energy, know so much about uranium, held in a uranium ETF and it's skyrocketed in the last month, sold out yesterday to take profits, but might buy back if it dips. I'm just going to be honest with you. I don't like to lie to people. I've done some work in the uranium space, talking to some CEOs and stuff of the like. But to say that I'm an expert in uranium, that'd be a lie. I know a little bit about it. I know that you can have, it in multiple forms, but yeah, it'd be a complete lie. But I don't think that uranium is a bad thing. In fact, let me pull it up. I actually am a very big proponent in nuclear energy, which I think because it's so volatile, sorry, not volatile, because it's so political. Sorry, that's what I meant. That's the term I wanted to use. Certain countries are all about it. Certain countries are not. You have people in Japan that are still, trying to hold themselves together from what happened in Fukushima. You have the Germans who are very much seeing that and wanting to get rid of all the nuclear power plants. And then obviously you saw what happened with that as they're decommissioning all these last year over the past several years in Germany. Then you have this natural gas crisis that's going on in Europe and causing these massive spikes in energy. And meanwhile, France is kind of insulated from all those things because of their love for nuclear energy. So I've seen bits and pieces of it from different people. A lot of people are working on these small modular reactors that are going to be something that are more on site rather than these massive cooling towers that you see. And say, like, when you look at Chernobyl, you look at the 3 Mile Islands of the world, you look at all these other massive nuclear power plants with these big cooling towers. They're going to be more things that are like shipping container sized, which can be good or bad, right? I mean, very portable, high density energy that's able to be more mobile, always a good thing. But at the same time, inappropriate procedures could always lead to some sort of disasters, right? Anyway, just some thoughts, but I'm a fan of uranium. I just don't know. I mean, with all cyclical commodities, right? Uranium being one of them, you kind of have to just be cautious. And it could be something that over time you continue to build back into, but I don't know. It's just one thing I don't know is how much capex is going into that world, how many companies are staying well in it, how many people are diverting their capital into lithium mining, uh, all these sorts of things that play a huge proponent, right? Because you might be thinking that uranium is doing well. Well, let's check out lithium, and see how that's kind of been going over the past several uh, several months. Oh, it's actually way down, still way up, I'd say, uh, comparatively where it was. But let me pull it up. So what you might have had is in the previous several years, a lot of people leaving the uranium markets to go with the lithium markets. And that led to what I don't know, right? This is just my speculation. At that time, you still have the same demand in uranium, but now you have people focusing on, at the same time, the lithium markets. And so all that capital was going into lithium markets. And now you kind of have a delay, let's just say, in your lithium production, right? So you had them both kind of going up at the same time. And, lithium is coming down versus uranium is not, which is pretty peculiar. I don't know. I don't know enough about it, to be honest with you. I would love to have somebody on that is a little bit more educated about it. Let me get rid of some of this. What is my buy price for Palantir? That's really, yeah, 130% annually. I love that. The buy price for me, I'm thinking about buying a little bit more now, even though it might be a raise on my cost basis. But I think for anybody that's looking at it, you have to recognize and put it in perspective of your entire portfolio. And people are probably like, that's a cop out, right? But you have to think, what other speculative bets do you have, right? And place Palantir on a spectrum. Do a little bit more due diligence and recognize that this is a company that is now cash flowing. This is a company that is now generating GAAP net income. And some of these things that you're looking at might not be in that place. And some of the companies that you're looking at might be in still a very speculative growth sort of phase. And so you also have to think, what kind of investor are you? Are you looking for something that's going to be 10 years down the road, a year down the road, 6 months down the road? How old are you? What are your objectives? What's your risk tolerance? I know a lot of people, they'll see it go from 20 to 15 and freak the F out, like Dutch Bros, for example. I started buying it in the 30s, low 30s, and now it's at 23, 24 bucks. Not really that scared, right? I think that they're going to have a pretty good quarter coming up here, and I've been adding slowly. to the position because I think it's going to be a good 10-year hold personally. So it really all just depends on kind of what you're looking for, right? If you're looking for a quick trade, you're going to set your portfolio up very differently than if you're looking for something that's 10 years down the road and looking to get the fruits of the labor there. You also recognize, where the big catalysts are coming from and also the big milestones, like Rocket Lab, for example. I think anybody that's looking at Rocket Lab probably has another couple quarters before they really need to be in before any sort of big movements. And because what's really happening, they're just getting to the point where they're delivering, they're trying to increase launch cadence. They're still in the middle of developing the Neutron rocket. So there's no big catalyst within the next year that's going to move the dial. They might get a little bit better in terms of getting closer and closer to break even, but it's like you have to recognize where these companies are in their investment cycle, where they are in terms of their maturity, right? A company that's still very much pre-revenue, um, very speculative at that point. Thing that is growing massively in revenue but is not profitable yet. That's another piece of maturity, right? You have to think about all these things versus if you look at the end of maturity, something like a Pepsi, something like an Altria Group. Those are things that most likely lack innovation, aren't going to grow massively, right? They'll still grow and they'll probably grow with more like inflation, or they'll probably grow with continued efficiencies that are made within the organization that squeeze out more profits, or with bolt-on acquisitions, right? So you have to think about where a company is in its investment cycle. Do you have something like that? Is that something you can stomach in your portfolio? I'd say if anybody is looking to buy into Palantir, they don't have any shares and they're planning on holding it until it actually becomes a huge company, like, and it has a move like they are today to what like Tesla did in 2018 and 2019, and they're willing to lose that capital. I don't understand why you're not potentially getting small shares today. Um, I'm not saying blow all your wad or anything like that, back up the truck, because honestly, I think that this could dip back into the 10, $11 range, depending on how bad things get, the remainder of the year. And if interest rates start rising again, like we've seen kind of in the first half of 2023 and late 2022, could easily see this continue down a bad path. But the problem that I have with people is they might try to time something. Let's just say I want $12. I want $12. I want $12. Cool. I understand. You always want to buy. But let's just say you want to buy. Um, let's just say you have $15,000, and you want to buy 1,000 shares, and you're like, all right, I have $15,000. You can buy 1,000 shares today, and have a cost basis of $14 a share. And if it goes from, let's just say, the $12 to $14 range, where like it is today, to let's just say $100. Yeah, you missed out on, say, an additional 5 or 10% uh, of the additional capital you would have had, right? Because maybe you would have been able to get closer to 1,100 shares, or a 1,000 shares, 50 at $12. But the only thing you can guarantee is the price today, right? The price that's right in front of you today. And so if you honestly think it's going to 100 and you're not dabbling yet, and you don't have any shares, you're doing yourself a disservice, because you can't guarantee it's going to get to 12. And how much would you be upset if it went from 14 to $100 a share over the course of the next 10 to 15 years and you didn't have any? Now, it's not to say that it's guaranteed to go to $100. There's always risks associated with any company. But I'd say in terms of companies that are continuing down a path of AI usage and chat GPT like growth, as you're expecting from Google and Microsoft and some of these other big tech companies, I'd say Palantir is up there with them. And specifically, if you're asking this question, if you haven't watched AIP and AIP cons, would be really cool to take a gander into that. So I know that wasn't a direct answer for you, but it's a personal question that everyone needs to ask themselves, right? There's people that are probably buying hand over fist anything below $20 because they're fully anticipating it could be $150. So anytime they get paid, they buy more because they anticipate it's going to be $150 a share in however many years. So, articles of climate change, energy shift for the moving towards clean energy. Looks like China has close to 21 nuclear power reactors being constructed. Them in India. Yeah, them in India. Yep, there you go. India with 8. Yes, and they both are growing. I think we're supposed to be passed by India in terms of GDP between 2030 and 2050. What's the easiest way to learn about options? The easiest way is to understand. I'm not going to give you a direct answer. It's like relearning the stock market, right? It's like relearning how to buy stocks. You have to utilize options for a multitude of reasons, right? Just like you wouldn't short a stock if you think it's going up, right? You wouldn't sell a covered call if you think the stock is going up. If you think the stock is going up as well, you wouldn't buy a put, right? So you have to kind of understand the lay of the land. You kind of have to understand, what they're being used for, what each thing is being used for. And what I would caution you is, at least when you're starting, don't buy anything that would have excess losses, and probably use a paper trade account for a little bit. And I would say there's a lot of good material online, but you have to recognize the way that's just like people invest in the stock market, right? Some people are swing traders, some people are day traders, some people are long-term investors. Options is the same way, except on steroids, I would say. And so really, when you listen to somebody talk about options, be sure you have the right frame of mind and perspective. And it's going to be tough, especially if you're a beginner, but recognize if they're saying something like leverage or income, or because that'll help you understand what is this person's goals and objectives, right? If they're trying to do things that are going to make them a 5x return over the course of a couple weeks, that's somebody that is more so using leverage and swing trading and what have you. And that may or may not fit into your strategy. But if you're looking like someone like myself, I utilize more covered calls, which is an income generator, to say it limits my potential upside, not guaranteed upside. But like I said, on say Amazon last week, I wrote a cover call a couple weeks ago for $140 strike price, and somebody gave me a premium to potentially buy those shares for $140. What ended up happening? I think by Friday they went down to the low 130s, and so it'd be stupid for that person to execute that contract, right? They'd be buying it at $140 a share, and it would be trading at $132 a share. If that made any sense, they would just go buy it out in the open market if they really wanted the shares. But say Amazon did go to 145, 170 or something like that, they would have been able to buy them at 140 because they paid me the contract price and sell it for the 145, the 150, 145, 155. And I would have been stuck with that opportunity cost. But that's okay because I got that income, right? But you can also buy them back. And, there's all these sorts of little legs that you can do that really adds to the complexity of things. And so makes it a little bit tougher. And then I also, so I would suggest covered calls is nice because you're coupling that with a position that you already own. Naked calls, don't do that, right? Unless you're very experienced, or just say in general. I've lost tens of thousands of dollars writing naked calls, and I would not recommend that on my worst enemy. I learned once, I lost $500. Then I learned twice, I lost $2,500. And this is in the matter of days, right? And then I didn't learn. And so the third time I learned because I lost probably $50,000, $60,000 during that whole GameStop thing when people were making absurd amounts of money. I went the opposite way, and I was just like, I can make $6,000. This is the thought. This is the thought, right? And this is where the discipline and acknowledging and knowing where you're smart enough or not smart enough to get yourself in and out of a position. Because I was smart enough to recognize that, hey, if I sell this contract 125 GameStop for next week or 2 weeks from now or whatever, I'm pulling in $6,000 in credit today. What I didn't realize is, what the hell am I going to do if GameStop goes to $250 a share overnight and I can't sell those contracts? Because really, GameStop was moving on the after hours market. It wasn't really moving too much during the day. And so I was like, okay, cool. It's staying below 125. Then it closes. And the next thing you know, it's going above 150, 160, 170. And that's the first time I've ever actually lost sleep investing in anything. And so really just had to recognize the true ins and outs of some of these things. And so if you're going to write calls, sell options, make sure you have the shares in your account, or just be really understanding that your loss potential is literally infinity. So what else? I sell puts too. That's income. That's basically saying, hey, if something hits a lower price, I'd be willing to buy it. But then you have people that buy both of those things. People buy calls because they think it's going to go up in price. They think it's, good leverage, or you have to think, say you have $10,000, you could buy, say, $10,000 worth of Palantir, or let's just say, for example, let's pull up a Robinhood example of Palantir. Let's just say you're very bullish on Palantir, right? And you have $10,000 and you're saying, what is the best thing for me to do in order to make this money? And I think that it's going to be very bullish going out to 2026. You're sitting there saying, we're at $14 today in terms of Palantir strike price. And you're saying, okay, I'm going to buy this January 2026 $13 call for $6. Well, first and foremost, $13 plus $6.20 is close to $19. So your break even, the point where you're actually going to get your money back, is in January 2026. Once it hits January 2026, if this is at $19, you're going to basically break even, right? So you have to start to look at what point am I actually going to start generating money, right? So you have to recognize anything above the point of, let's just say, 19-ish bucks, you're going to start gaining more and more. So let's just say, for example, it goes to $26, right? You'll essentially be able to sell $100 worth of stock, which for $26, so $2,600 worth of stock, but you bought it for $6.20, right? Rather than having to spend $1,300, right? So now you were able to buy $620 and be able to sell it for $2,600. So let's just say 620. Whoops. Minus 620 in terms of that, and then divided by 620 because that's where your cost. You're basically going up 3x in that particular case, rather than doubling your money. So you went from 100% return to a 300% return. Now let's just say you wanted to buy $1,200 worth, right? You could buy almost 1,000, or sorry, you could buy almost 100 shares versus that $1,300, right? So let's just make it an even 100 shares versus being able to buy 2 contracts of this. So let's just say it does go back to $26. Now you have control of 200 shares because you're able to buy 2 contracts, $620 a piece, which gets you close to $1,300. So 200 shares times $26, you're at $5,200. Well, if you buy only 100 shares, $1,300 and you're able to say get it to the $26 share price, right? So you're utilizing the fact that you're able to control more shares at a different price. And so that's kind of what some people are kind of doing. Then there's things like spreads and God knows what. And it gets very complex, right? But I'd say it's something like just like it took you to learn the stock market and get the hang of it and recognize there's shorts, there's longs, there's people that are swing trading. It's the same thing, man. And I'd say that I'm always learning as well because there's so many different ways that you can utilize these things, just like invest in the stock market, right? I mean, I've really come to the point of understanding risk management over the past year and a half better than I ever have in the last, say, 10 years of investing. And it's not because I read anything or anything of the like. It's more so just because I've had a little bit more experience. I've got punched in the mouth a little bit more. And so some of it is this experience and making sure you don't overexpose yourself and you truly understand what you're doing. Amazon and Google 0, I concur. Started bros at 30, been selling cover calls and cash secured put for the synthetic dividend. That's pretty dope. Looks like Jeppy can go to 50. I'll be loading up if it does. Yeah, blow your wad. Would you sell leap puts or buy leap calls on Palantir? I guess it all really depends, right? I mean, leap puts, you're going to be very limited. You're already if you sell leap puts, then you're basically saying you know what 100% return would look like, right? So let's use that as an example. That's a good thing to kind of say as like an example. Let me pull up Palantir again, and I like using Robinhood to kind of explain these things because it makes it a little bit easier in terms of being able to understand. But we'll use a similar process that we're kind of talking about, right? January 2026, $13 strike price. Matt, why wouldn't you sell the $13 puts? Well, if I sold $13 puts, I'd be obligating myself to buy these Palantir shares at $13, which pretty cool. If like, let's just say, for example, you'd be able to buy this and it would go below $13 and you'd have the opportunity to buy them at $13, but they're at 14 now. Do you really think that they're going to stay at 14 or $13 in the next 2.5 years? I don't think so personally, but let's just say you do believe that. You'll be able to do that contract, set aside $1,300, and they'll pay you $350 for that contract. Now, this $350 is the only $350 you'll get from this contract. Now, the best case scenario, you walk away with $350 because that's what they're paying you. The worst case scenario is Palantir goes to zero, and we're not saying that as a joke, but this is literally the worst case. Palantir goes to zero. You set aside $1,300 to buy this, and so technically you still have to buy it at $13, but your costs are offset by $3.50. So 1,300 minus 350. So your maximum loss is 950, which that is only if it goes to zero, right? If let's just say if it goes to $5, it would be 1,300 minus 500 minus the 350. Whoops. We're losing $450 instead of the 950 or whatever. So at maximum, you're only going to make $350. If it goes to $100 a share, if it goes to $25 a share, the max you're going to make per contract is $350. Now, if you buy a call, and let's just say it goes to $100 a share, bad example, but let's just say it. You bought $13 long call, goes to $100 a share, so 1,300. Sorry, $100 a share. 100 shares. It's worth 10 grand, right? And in order to get there, you kind of have to minus this 1,300 out, so $8,700 in potential profit, but you've spent $670 to get there. So you're going to walk away if you buy this leap and it goes to $100 a share with like 8 grand. So you turn 620 to 8 grand, right? But that's an extreme case, right? I mean, it's not always going to be like that. And I know you probably can't see the calculator, can you? But I'm just doing math on. I'm not even sharing. Not even sharing the screen. Sorry, guys. So $620 for a contract for this. Let's just say it goes to, I don't know. Let's just say it goes $40. So contract, you're basically saying it goes to $40. You could sell 100 shares for $4,000. But obviously, you can't take away this 1,300. You have to subtract out 1,300, and you also have to subtract out the 620. So you turn 620 into $2,000 profit, right? You'd walk away with about $2,700, right? The other problem is like this is if you get it, you let it go to expiry. Say if you were to buy it and it were to go to $40 today, there'd be so much extrinsic value, meaning like it's always going to price in, just like this $13 contract that's at $14. So the total intrinsic value of this is really only $1, right? So you're paying $5 or so of extrinsic value, meaning like if it were to stay at $14 for the next 2.5 years, you'd walk away with $1 ish of being able to sell this contract for, and this $5 will disappear because it's basically this premium, right? That's what the premium piece is. But anyway, I don't want to go too much in depth into this sort of stuff, but hopefully it just goes to show you like you have to organize and utilize options to what you're truly looking to do, right? And so if you're truly very bullish on a company, it would most likely make sense to buy leaps. But you also have to recognize you can't guarantee that a company will go from $13 to $40 in that time allotment. But if you were to say buy the shares, in the example where we had $1,000 or $1,200, and we bought 100 shares of Palantir at $13 versus 2 contracts, it's like, well, let's just say it doesn't get to $40 until 2027 or 2028. That's fine in the case where you bought the shares. It's not okay in the case where you bought options. Yes, you're controlling 200 more shares, but you're only controlling 200 shares until January 2026. After that, you don't control them anymore. And that's part of the problem with options is like you don't only have to be right, but you have to be right in the right time period. So Matt Money's going to zero, my guy. FTC lawsuit with Amazon. I don't know anything about it. Dish hit a new low today, which made profits of $2.07, which book value went up this year from 33 to 34. Book value went up $1.54. Which shares hit a low is insane. Well, what are Dish shares worth? $5.72. I mean, I don't understand why the price to earnings. Is it just because people are quitting? People are quitting TV? I don't know. That's an interesting thought. I don't know. That's something I might have to look into the cash flow statements for. If Palantir pops to 18 after the NHS deal, are you planning to sell a covered call? I don't want to sell covered calls really below or too much above 20. I would want, 22, 23, 24. But I think it also depends. We're getting close to the end of the quarter. I would think that earnings is going to be early November. So it all just really depends on where we're at, right? If it moves up, instantaneously to $18, I maybe sell something at 25 if there's any premium there. But I'm not going to sell it, unless it gets good premium. Risk versus reward, right? I would hate to, because I have 4,000 shares. I'd hate to sell 40 contracts at 2 cents and walk away with $80. And next thing you know, it pops up and then playing a headache game. I'd rather keep the 80. I'd rather keep my sanity for $80. You know what I mean? Yeah, this one's interesting. I don't know. I would have to look at this. Ahad, what's going on, my guy? Fascist Labs. Hot Kev. Yeah, I'm gonna be excited and buy more Palantir either, especially if it actually ends up doing as well as I think. Jackalope, what's going on, my guy? Am I gonna watch Dumb Money, or will it be Painful Memories? I'm okay, man. I've gotten past it. I've gotten past it. As much as it did hurt, it's a valuable lesson. Palantir did get a 250 million contract. I do want to talk about that actually. It'll probably be something we talk about on Friday with Palantir Weekly, especially if the NHS deal comes through and if Kathy has an interesting conversation with Sham on Thursday as well. You have to think about this $250 million contract. Somebody put it in a good lens earlier. So Palantir is making between 500 and 550 million a quarter. And so this deal ends up being about $80 million a year, about 20 million a quarter, right? So if you think about that, that's an immediate bump of about 4% on an annualized run rate, right? Going from, let's just say, close to $2 billion a year and getting an $80 million additional contract a year because it's 250 over 3 years. That's an additional bump of 4%. So if you were looking for decent growth, there you go. And I don't think that at least a little bit of growth, you have that. I don't think that this is going to be something that goes in smaller volumes. Like the Army continues to increase their volume sizes with Palantir. So anyway, they say that it's supposed to be on Thursday, the 28th. So 2 days from now with the NHS deal, but I really don't know. And they might delay it too. They did that before. Like, what was it? It's supposed to be in, I'm going to mess it up by saying it, by April or May. And they pushed it back so many times. But anyway, I appreciate it. And Sam, so much thanks for becoming a member. That was really cool. I think you're the only member of the channel. And so really helps out. I would love to do this full time, right? I'd love to talk to you guys full time. I'd love to be going back and forth with Amit on a day-to-day basis, talking about investing in stocks and stuff of the like. And I would love to spend more hours preparing for a show like this every single night. But in the meantime, I'm working a 9 to 5. I like what I do, but I think I would love doing this more. It's a lot of fun hanging out with you guys. It's a lot of fun going through companies. And in fact, I think I'm going to ask Chris when we have the opportunity to go through Dish, because if it's really as good as you say it is, that's something that's peculiar. And if it's really selling for that cheap, then I'm intrigued. So let's just see. Their price to book. Yeah, their price to book, as you stated, is pretty low. They're sitting at a 0.18 right now. Book value per share, $34. The price is $6, $5. So yeah, price to book is really small, less than 1/5 of a share. That's interesting. Or not 1/5 of a share. You're buying shares at 1/5 the value of book. So that either means that there's some sort of massive litigation they think is going to happen, or the actual book value is garbage. So it's interesting. But as always, appreciate you guys. And if you guys could just make sure you hit the like and subscribe button. Would love to do this for you guys full time, and do this every single night for you guys. Let me know if there's any other comments, questions, or anything in the comment section. Hit me up on Twitter. That's always available for you guys. Stalin Labs, you guys are fucking great, dude. Part of me doesn't want to change it because you guys get all fired up about Stalin Labs. So, but Dish, that was a cool one to bring in. I'll think about, and I guess June. If there's any uranium companies that you want me to reach out to in particular, let me know. Some of these guys are small and thinly traded, and so sometimes I come on the channel just to help out with liquidity. You could probably search my channel. I've had a few CEOs of uranium companies kind of come online, and also some people that have asked me to run through their uranium portfolios as well. Not to say that they're great, but we've had some that did really, really well. I'm trying to remember which ones. It was like UROY, Uranium Royalty. I don't know where that one's at, but that one paid a hefty dividend. Yeah, we covered that one on the channel, I think. Let me double check this one. We covered this bad boy on the channel, and it ended up doing relatively well. And I think it paid a decent dividend, or at least it was going to. But yeah, I haven't talked to those guys in a while. But I think they reached out to me in like 2021 or late 2020 or something like that, and I had them on the channel. And I try not to make a habit. I try not to make a habit of bringing those guys on because sometimes I feel like, some of these companies are a little bit spotty sometimes, but sometimes it's cool just to see the different industries, right? Like Uranium Royalty. I mean, that's a legit company. They have a lot of uranium pieces, and I think that they coupled with something like that. Maybe I'm wrong. No, different company. Sorry. Maybe it was just U stock. Nope, that's Unity Software. Now I'm just over my head. It's been a while since I've looked at those, but yeah, if you have any particular companies, especially if they're like Canadian based, they always love coming on an American based channel. I'm not lying with that. I'm being honest. So cool. All right. Well, I'm gonna call it here, and I'm gonna finish up some work. It's gonna be a busy week until Thursday, but after Thursday, man, it should be smooth sailing. So don't do anything I wouldn't do, and appreciate having you guys on as always. Cheers, and have a good rest of the night.